Gold has always been the most sought-after precious metal since the beginning of time. We've heard so much about it since childhood, in storybook, fairy tale, and nursery rhyme, that it continues to be mined from this earth today. Owning gold as a commodity was made possible at the start of the 20th century when President Theodore Roosevelt signed a bill into law authorizing the purchase of gold, where consumers could exchange their dollars into gold once the dollar was strong, but then sell it back again once the dollar weakened, entitling them to more dollars in return. But in 1944, that would all change. With the Second World War in its waning stages, representatives from 44 Allied nations met at Bretton Woods, New Hampshire that July to regulate the international monetary and financial order, making all European currencies convertible by the end of the war. And it was also agreed that the US dollar be placed on a gold value status as a commodity and reserve currency, valued at $35 per troy ounce. Nations could then exchange their currencies into US dollars, which also helped boost their post-war economies, signed into law by President Franklin Roosevelt, that also made it illegal to own gold, forcing many Americans to exchange their gold back into US dollars. However, in 1971, that all changed again when President Richard Nixon signed a bill into law cutting the US dollar from its gold value status.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States. In full cooperation with the International Monetary Fund and those who trade with us, we will press for the necessary reforms to set up an urgently needed new international monetary system. Stability and equal treatment is in everybody's best interest.
This new law made it illegal for Americans to purchase gold once again, while canceling out all direct convertibility of the US dollar to gold. The US dollar will be regulated as a fiat currency, permitting other currencies to float with it. But over the years that followed, economic hardship began to take its toll on many nations, including the United States and the European Union. Such financial struggle weakened many currencies that caused some to become worthless, that they just simply vanished. As of 2015, 19 of the 28 members of the European Union are part of the Eurozone, which on January 1st, 1999, a single currency, the euro, was introduced and implemented. Gone are the currencies such as the French franc, Deutschmark, Dutch guilder, Italian lira, to name a few. Even after more than 40 years since it was taken off from its gold value status, the US dollar still remains the reserve currency for many countries abroad, as well as the sole currency for 8 other nations outside the United States. But with the US dollar pegged to the euro, the foreboding future and vulnerability of both currencies lie in peril with the constant rise and fall against commodities such as gold, which never loses its value. With the coming and going of many currencies, gold has always remained the currency of the past, present, and future, recognized by the world many times over. Exchanging your dollars into gold is like putting money into a piggy bank, where you can, should the dollar collapse, protect your life savings and assets, not only for yourselves, but for your children and your children's children. The big plus are that now more and more businesses today are beginning to recognize gold as an important currency that may one day replace the vulnerable dollar, the euro, and all other currencies.